Let's talk some banks as they are jamming the last couple of weeks, but getting hit today kind of hard. Mr. Hans Albrecht joins me, CEO at Gamma Option Solutions. Hans, the banks have been a good trade. I know you've been in the likes of Goldman, maybe others. I was pointing out the regionals, which are holding on pretty strong today. But Bank of America is breaking down pretty bad. Tell me what you're seeing.
Yeah, look, they've had a good run. So there's always that element in trading and investing where you kind of have a big run, and we've sort of priced in a lot of the great news, and ultimately they need to digest things a little bit. But I think it's still a great trade. I think for me, I prefer to be, as I mentioned last time, I prefer to be in the investment banks. I think they're a little bit more exposed to the things that are really exciting, that are less risky, right? I want a little bit less exposure to loans and consumer credit risk and things like that. The investment banks are really exposed to all those great things, the deals, the IPOs, the trading revenue, right? We get volatility, we get trading revenue. So that's where I kind of feel like the comfort zone is, because of course over time we have this job issue, the job situation, and I prefer to just be with the smartest guys in the room who know what to do in an expansion that is really very structural. So AI is structural. It is not a
Right.
cyclical thing. And they have the best
Okay.
exposure to.
So Hans, to that point then, I want you to chime in on our conversation. I know you heard some of that with John there. I was kind of making the case that I'm a little bit of like a free market extremist when it comes to lending. Obviously you want to have some guardrails, but more monitoring for volatility more so than hard guardrails. And I feel that if the system is generally functioning well and you have secular support in real productivity like AI, capital markets solid, that you should be able to lend whatever rate you want between two consenting adult parties. What do you think?
Well, that's a good way to put it, and I agree. I mean, look, we have taken a little sort of lean towards less free capital markets in the last little while, and of course we know that President Trump is going to do what is necessary this year, as it's an election year, and so it's about a little bit of pandering to the people, and it's about kind of juicing things, right? So a lot of what the administration is about is a lot of gas and very few brakes. And so we see that we're getting a lot of tailwinds. I don't know if he needs that extra tailwind. You already have the big, beautiful bill. You got the tax benefits. You've got the credits coming back to, the child credit. You've got so much stuff going on that's very kind of, sort of stimulus led for the economy. I don't know if
Sure.
you need
Yeah.
this
I mean, look at the productivity number. Productivity is by definition the natural stimulus. Okay, that's like the pollen in the flowers. Okay, like that's as good as it gets, baby. That's the honeybee's, favorite. Really, and that's what's happening. Productivity, you get more out when you put in less. So that's a beautiful thing, and to me is kind of one of the most important benchmarks for the functioning of an economy. So out of the philosophy class for a second, Hans, what does this mean? Buy calls in XLF, buy calls in KBE, buy calls in GS? What about Bank of America? How deep through the discount pile do you go?
Yeah, I mean, productivity. I think we could see fantastic growth, fantastic GDP growth. Of course, we don't know how that affects jobs necessarily, but it's a bit like, you remember that movie Vacation where he's got the extra gas tank, and the son says, "Well, Dad, why don't they just make one big gas tank?" He goes, "Russ, it's an extra gas tank, okay? You got that extra gas tank from productivity now, as well as all the probably little gas tanks around from all these other stimulating type things, and off we go here." Where it is, in my view, we've seen a shift. You and I talked about IWM last time. Look at how it has performed lately. IWM up again as MAG gets absolutely smoked. And so I think there's a very, very important theme in there. And I agree with you. I think XLE, I mean, oil is kind of the
IWM looks
tricky one,
good.
right?
Small caps look good.
Yeah.
I'll give you that. Yeah, they do look good.
The small caps look good. And you know what I love about these kinds of trades, Oliver, is if you look at where options are priced, they're kind of still pricing these things. I'd say the same is for staples, same is for industrials. They're pricing some of these things, even though they've had nice little runs, like they're sort of your dad's staples, right? This is new. So as I said earlier, this new AI build out, which is happening all around the world, this industrial revitalization, is very much a structural thing. It's not cyclical. You hear people talk about this, cyclical. It's not cyclical. You're building a whole bunch of New York cities, another 10,000 New York cities, and it's going to happen. So I think the vol is actually a little bit underpriced. So I see that upside is very, very attractive here.
All right, I'm with you basically when it comes to kind of the infrastructure, the industrial revolution of tech. Joe Weisenthal at Bloomberg did this awesome piece about coding via Claude and what he was able to produce from that, and it brought him a lot of joy. It brought his followers some joy. You know, it was super interesting to see a case study on how just your everyday person, obviously Joe's not your everyday person, he's a very brilliant guy, but without an expertise in something was able to have a Claude code create something really fantastic for you. A lot of the stuff that I've talked about here in my own case for the show and otherwise, a lot of AI support behind that. So I definitely sympathize with that, that it's more than just a cycle. So that kind of brings us to the tech and the other items then. You know, if we believe that, then Hans, is the best way to put our money where our mouth is right now to go over to the chart of MAGs, M-A-G-S, the ticker representing the MAG 7, which have been range bound now for months, and just buy the heck out of this thing?
I don't think so. I don't think so. Not right now, Oliver, because I think what you have to.
If it's not a cyclical thing, if this is the power, if this is what gets us here, Hans, this thing's been consolidating, been price correcting for months.
It is, but I think I think the stories are intact, and these are not bad companies. I mean, I think Meta's making some mistakes there, right? So you sort of look at how 3 or 4 months ago, Oliver, we had incredibly high, we had amazingly high correlation within MAG, right? So think of the stage of AI. Think of how manias work, right? Early on, everybody wins. The tide sort of lifts all boats. Everybody's having a great time. You just put a .com on the end of your name, and boom, your stock triples. So you've got this amazing early stage. Now you're sort of moving into where, okay, the investors are starting to be a little bit more discerning. Meta just wants more compute. They want to spend more money. They want stuff. And look at what Trump's doing. He said, listen, Microsoft's agreed to kind of shoulder the cost of some of the electricity. So again, election year, there's pushback against these massive, massive companies that now are dealing with incredible competition in the chip space. They're dealing with having to maybe shoulder some of the cost of what they've created, which is a lot of disruption. And I think that represents a difficult place to be and is just extra fuel for the rotation into those other things. What are you doing? What doesn't get affected like that? Something like a Quanta. It is about maintaining the electricity grid. It's about building it out. It's about all the things that absolutely have to happen, boots on the ground, and that was related to the copper trade and all these other things. This is real world stuff that is now happening around the world. And I think there are interesting places there for this broadening, as well as every other, little business that presented.
Well argued, Hans. I like it. I think the correlation breakdown within MAGs is a very good point, that the companies have separated. That's telling us it's stock specific. We see it echoed in copper, which I know is an important part of this trade too. So I think it fits. I think it's very well argued. Appreciate it very much. Hans Albrecht.
Yeah, can I add one more thing?
Please do,
Oliver,
sir.
Can I add one more thing? I think what investors are also dealing with is this agentic AI and this Adobe situation. So you've been watching the software names really, really get taken out to the shed. And I think there's a very, very important message in there. And it's that, and I see people on Twitter, on X, they're tweeting, I can't believe it. Adobe
Cloud's getting killed. CLOU.
It's unbelievable. These stocks are cheap. That is not how you look at this, at what is happening in the world. You do not look at how a company is doing now. You look at how a company is going to likely be doing 2 years from now. We don't know exactly.
Fair.
But right now, the market is saying Nano Banana is unbelievable. Agentic AI, as you said, is starting to do crazy stuff. There's one video I watched this morning where this thing works all night long while you sleep. This thing is going round and round. The compute never stops. The gears never stop turning, right? This is changing the world, and that is bad news for software. Now, I am not saying Adobe's in trouble. I am saying that investors have to look at this very differently. PE matters zero. They have fantastic cash flow. Investors are looking at this this is the most disruptive environment we have ever seen in the history of markets. And they're saying, you're doing great now, but how are you going to be doing 2 years from now? And so it's becoming a very bifurcated, absolute winners, and we don't know what the hell's going on. And Google, for example, is taking over, right? They're now starting to do all of these things that 2,500 different companies do. And I think there's some worries in that tech space, which is pushing people into, okay, what do I know?
You the man. Thank you, Hans. Hot take. I love it. Appreciate it. Don't go long mags, though I think Alphabet looks like the best chart there. Thank you very much. Hans Albrecht, CEO. Game Option Solutions, Mr. Nigam Aurora.